Hi, Larry. I see you in the house. I'm going to make you the panelist so that we could hear your voice. And then I'm going to take the screen so I could show your
Yep.
website. Okay. So just wait a second. Make presenter, show my screen. And here we go. What a team. I've spoken to many of your experts, Larry. How are you?
I'm very well. Thanks for having us on. I appreciate it.
Yeah, it's great to meet you. I've read, your bio and a little bit about your history. What's interesting to me, Larry, would you prefer I call you Lawrence? Is it Larry
No,
okay?
definitely. You could call me Larry, or you can call me Benny, which is basically a name that people knew me in the business for about 25 years, and I used to do a ton of business on the floor, and I would go.
Was that your badge?
No, it was my nickname for Benedict. Everyone called me Benny, but many people did business with me, and they'd say, "Oh, Larry's on the phone," and they wouldn't even know who that was. It was really kind of funny. So you call me Larry, but anyway.
All right, Larry. All right, so you've achieved a lot of great things, especially being written up by Jack. But I'd like to take you back to how you got in the business and what you may have been doing beforehand. Maybe, your whole life has been involved in markets, but why don't you take us back to the genesis of your career in the markets?
It started in 1984. I was at Syracuse University, and I went out to Chicago and had a friend there, and they took me to the exchange, and they were trading soybeans, and I went on
trade.
Yes, and I went down to the floor, and I was a senior, 21 years old, and I saw what was going on, which no one could even understand because it doesn't exist like that anymore, which is kind of sad in a way.
Yeah.
But I saw that, and I said, whatever is going on here, I want to learn it, and I want to do it. And I spoke to the gentleman who was the trader, and he said, this was 1984. He said, I haven't really made money since the 70s. Big money. I think you should go learn options and go to the equity markets. And when I started, the Dow was, people are freaking out when it goes to like 23,000. It was 900 when I started. Right. So, I went to the floor. I went to the floor of the CBOE, and I was a clerk, a runner, and started from the ground up, and traded my own money for a bit, and then worked for a clearing firm that backed traders for a while, and then in the 90s, 1989, I went to Spear, Leeds and Kellogg, which was, I don't know if you're familiar with the firm.
I remember it.
Yeah, we were the largest specialist on the floor of all exchanges. We were a huge clearing business, and I worked there for 11 years as a prop trader, ran index derivatives for them, and the business was sold in 2000 to Goldman Sachs, and then I left there and set up a hedge fund that ran successfully for 13 years and to the outside. Wow. And, that's sort of the career. There were a lot of bumps in the road, but, it worked out.
We had a similar experience, and I'm sure there's multitudes did. I went to the CME, and I was up in the gallery and watched the belly market go fast market, everyone screaming, going crazy, and a friend of mine signed me onto the floor as a guest, and I went from brokerage house to brokerage house, said the same thing. I really don't care what you pay me. I want to learn. And really a great place. And you and I both, have fond memories and wish it existed for people coming into the business now. Most of the exchanges have become bowling alleys, except for the options pits. All right, so that's how it started for you. Who were your biggest influences? Were there any books or mentors, or are you pretty much self-taught?
Well, there were mentors along the way. No one that is really known to the outside world.
Okay.
People that were at Spear Leads, that I reported to, very, very good traders. A guy named Randy Dorfman, very good trader at Spear Leads, as well as Larry Lavecchio. They taught me discipline, and I sort of had what it took to really be successful, but it was really learning how to, I guess, bottle it up and stay disciplined, to be able to take risk, calculated risk, and make money. And that took a bit of time. That took probably 3 to 4 years, and it makes me laugh in the marketplace of online education, which we're attempting at this point. We're 6 months in, to give to people in a different way. How people say how easy it is, and you turn $20,000 into $2 million, and
Larry,
all of this
I've
stuff.
interviewed almost 1,000 traders, educators, analysts over the years, and I asked that question: how many years did it take? So you beat me to the punch, to make a breakthrough and become consistent in the market, at least more consistent to when, you felt like you had it. You had a paradigm that was working for you. So that's interesting. It confirms what I've been hearing for a long time. You and I had a little conversation on the phone. Yes, people still do have conversations on the phone. They don't just text. And I think it was during a pretty good down day, and they were bringing the market back. And you were talking about how the markets have changed, because of central planning and, interventions in the markets. How have you adjusted to, a lot of guys made a fortune in open outcry because they didn't even have to know how to trade. They just traded off the paper. They knew where the stops were. They'd get long into the buy stops and use that liquidity to take profits or reverse. How did you make the adjustment from the floor to sitting in front of your screen every day?
Well, I kind of got lucky in a way. I was on the floor, and
you were at SIBO, right?
I was in SIBO, and then I went back to New York in '87, and
that was a good year.
Yeah, that was a fun day to be on the floor. I was actually on the floor of the New York that day. It was awesome.
I had an office in Phoenix, a penthouse office, and my bank was downstairs, and I went down to see if the banks were still open. So anyway, they didn't even know.
Listen, I gotta be honest with you. The same thing happened in '08. Yeah. I had about $900 million in my hedge fund at the time, and we were, clearing at Goldman Sachs and UBS, and basically Goldman had to become a bank and demutualize because everybody was pulling their money, and we were freaking out. So it was the same type of thing. We were doing well, and
wanted to make sure that you could get return of capital, not just return on capital. So would you consider yourself more of a market technician or fundamentals? What's the mix or blend of how you look at it?
I would say the technicals are in my mind, and I'm always looking at charts on a longer term basis, but I would say a little bit more fundamental, but really, short term alpha trading. So doing a lot of transactions in a day, testing the market, doing a lot of options. Options are integral in what I do, both for hedging and enhancing return. It's worked for me well. But getting back to what you said before, what was interesting for me was when I was on the floor, I was trading S&Ps over the phone. So for me, I was lucky enough to make that transformation. But what happened to a lot of my friends and a lot of locals, as you know, they couldn't do it, and they waited too long, and it was game over. But for my trading, it's short term, a lot of trades, a little bit technical, some fundamentals, but really market action, markets against other markets, looking at, Europe and Asia and all these other clues.
So correlation work is a big part of it, trying to put the jigsaw puzzle together.
Yes. And, it's become a lot harder over the last couple of years, only because the algorithms have come in and they've thrown wrenches into what you would look at as a pure setup. And it's almost like a pure setup the other way. So they set it a certain way, and then they turn the table on you. So you have to, when you say adapt, we're adapting every day. We're watching, different things that make the market move. And we're in an interesting time now, because I think the algos are getting chewed up, and it may be time for some actual people out there to capitalize on this.
Yeah, well, maybe they should get rid of decimalization and go back to fractions and have some human beings in there that have the incentive to fill, so they could make some money on the spread. When the robots go crazy, you would have some human being backstops.
Right, and that's the hardest thing to look at. So when you were trading in fractions, you were trading in teenies or sixteenths, and eighths, and you knew what you were trading for. There was you didn't. Now when you go in, especially on equities, you don't know if you're trading for a penny, 3 pennies. You don't know if you're going to get filled at 6 pennies. You have no idea. So it's really hard to gauge in sizing of the position and where you can get filled, on the equities. I mean, the futures markets are really, really efficient. I mean, the S&P is, minimum tick, whatever you need to do. But, as we're moving, it's very difficult to execute, because the algo, sees your order before it hits the exchange.
Okay, well, I confess I did not read Market Wizards 2. What was Jack interested in learning from you? And why did he choose you to be included in such an elite group?
I think he was introduced to me through somebody that was at Soros, who had money with me at the time. And, we went through a period of 12 or 13 years with our biggest drawdown being 5% peak to trough.
That's amazing.
And having no down years, and basically just grinding it out year in and year out, on big capital, the lowest capital probably a few $100 million up to $1 billion. So, I think that's why he was intrigued by it, and he sat with me for close to a week and watched me trade and interviewed me and spent time with me, and sort of got an understanding of how I do it, which in a way is a lot different than a lot of guys that are
in what way? In what way?
Well, I'm more of a counter trend, mean reversion guy. And
you're like Paul Tudor Jones, all the big money's made at the turns.
Right. So, but Paul might sit for a long time. I'm in and out inside the trend multiple times, and I'll counter trend inside. We might have a downtrend, and I might think that the market looks okay for a bounce, and get long it for 15 S&P handles, and that's a good trade for me. So
you use divergence. What tells you that you're near reaction points in the market?
Well, a lot of stuff I look at is option volatility, looking at option pricing. So really options are queuing me in, and then, looking at markets, it's been a lot more divergence in the last couple of years. What used to work for us like a charm is mean reversion between international markets and the US. And obviously if you're looking at that this year and you tried to play that, you're getting hammered. So, but that worked really well for 5, 6, 7 years. So we would run, divergence to the mean off of other markets. So, if the DAX was up 11% and we were up 7, we may short DAX and buy US and, catch the, the turn back. And, those markets mean reverted, and, most years ended up plus or minus 2% from each other. But, in fact, if you did that this year, you have the DAX down a smooth 15, and we're basically flat. So
emerging markets, if you're doing the weakness because of dollar strength. Do you pay attention, since currencies are bailiwick, and it's my belief that it's really the fulcrum of what most of all markets spin around, the value of the dollar, since it's a reserve currency? You pay attention to currencies?
Sure, I look at currencies, but it's hard on a short-term basis.
Okay, so let's
there's
go. Let's look ahead then into 2019. You have a view on the dollar?
Yeah, I think everybody's dollar bullish, which was the opposite view of the year before. And I would tend to think that we're probably going to be dollar bullish first quarter of the year and then go the other way for the rest of the
Oh,
year, potentially.
okay. So,
That's
and
my
you think,
thought.
all right, I mean, look, here's a disclaimer, past performance is not indicative of future results. You think that will peak underneath the Dixie 104 level from a year ago in the first quarter, or take it out? Do you have a vibe on it?
No, you know what? I
Okay,
don't, but
that's cool.
it could get down in there. I mean, to be honest with you, the dollar is not my expertise in any way. I do trade currencies against the dollar on occasion.
Okay.
It's been less and less a focus. I used to do a
Anything
ton.
in commodities, Larry, that you pay attention to?
Yeah, I trade crude and gold and, obviously watch everything. I saw the
Right.
natural gas move. We didn't participate in that, although I don't know if you saw on my site at the Opportunistic Trader, I have Mark Fisher. I don't know if you know Mark,
Yeah, I have.
legendary.
If you can see, I have all your team up here. You have a massive team. Are they all in your chat rooms and come and work with people? I've interviewed Bryn and I've
Yeah,
interviewed
Bryn is
Dave.
in our chat every day, and she also does multiple webinars. And I'm sorry, who else do you know?
Bryn and Tracy. I've interviewed Dave Floyd, Angie Setzer. She's great with ags. So it looks like you found the best of the best in a lot of different segments of the market.
Yeah, I mean, that's what we tried to do. That was my plan, is to put together a product at the Opportunistic Trader that not only potentially gives our trades, but gives you an opportunity to learn from Bryn, who is, very, very talented in the oil and electricity markets. And, obviously, Tracy's great. And, but Mark Fisher is, legendary. I mean, he's just made so much P&L in his career, and he's been trading since he's 19 years old. And
Wow.
I've known him, since I'm 22, and
Okay.
I've watched the amount of money and how well he's done, and to get that information from him is pretty unbelievable. And if you go back and look pre this natural gas move, he was all over it before it moved. And, to me, to provide that information or, analysis to the public is something that you're not getting. I mean, he comes on CNBC maybe once or twice a quarter, maybe, but you get him on my site twice a week. So
Nice.
yeah,
Okay.
so I think, that was a lot of what I am looking to do here, is to provide great information to help people navigate the markets and make money.
What's the, I asked Jack this question, what's the most important thing that you can tell traders, new, been around for a while, whatever? And he said, find a trading style that suits your personality. What would Larry Benedict say?
I would say that understanding risk is the most important thing to trading. Sizing of positions and understanding how to handle swings and being able to come back from numbers. So for us, it was always and is always that if you don't get down a lot, you're gonna see the balls. So I would say my advice is to stay small and grind it out, and that's what we do every single day. I'm a
Dale
grinder.
Pinkert wrote a song, Use Less Leverage, so you could find it on the internet. Larry, really a pleasure meeting you, and people could follow you at Opportunistic Trader with a 1 after it on Twitter. And this is your website, www.opportunistictrader.com.
Yes.
What do you offer as far as trades? You have a chat room, a trading room.
Yeah, I give out all the trades that I do, as well as a couple other people in the community, in our expert community, and we have a chat room going all day with multiple rooms. We have a currency, we have a commodity, we have an equity, and we have a general room, so you can camp out there. And then all day long, we are getting experts in different markets and different landscapes to give webinars. I think we have Bryn on today, actually, as well as 3 or 4 other people in different spaces. So we provide educational webinars and informational webinars around the chat room as well.
Okay, Larry. Well, great meeting you. I wish you and your team, and all the people who read your stuff, that pips are like snowflakes in a blizzard on top of all of them, that they have a Merry Christmas and a Happy New Year and a great trading year in 2019 ahead of us. So you're now my trading warrior brother, like it or not, Larry.
I like it. So I look forward to speaking more, and I appreciate you having me on today.
You're very welcome. Everybody, Larry Benedict, you could follow him on Twitter at Opportunistic Trader 1, and go to his website. You'll see a lot of great analysis there. And that's a wrap for us for today. And really, everyone remember this. Don't just count your pips, count your blessings. We'll see everyone to wrap up the week tomorrow. Larry Benedict, Market Wizard, thank you for being with us today. And we'll see everyone tomorrow. Adios.
Thank you very much.
You're welcome, buddy.
Bye.
Bye-bye.